Bank of England will release its first interest rate decision for 2026 on Thursday and is expected to leave rates unchanged at 3.75% after cutting rates by 25 basis points in December last year. The market is pricing in just a 4% probability of the Bank of England changing rates, with a 25 basis point rate cut priced in at 28% in March and then fully priced in for April. So as far as expectations are concerned, given that no rate cut is expected, it does mean that the focus is going to be very much more on the vote split and also the tone of the central bank and central bank governor Andrew Bailey. Now, as we go into this meeting, the vote split is expected to be 7-2. So that's 7 members of the MPC committee voting to leave rates unchanged. And also, as far as expectations surrounding the inflation outlook and growth will be in focus. Now, inflation, as we head into this meeting, did actually tick higher to 3.4% year on year in December. That was up from 3.2%. The Bank of England did say in the December meeting that they expect inflation to cool towards that 2% target level by spring this year. And I think given the fact that wage growth is expected to also start cooling, then that does mean that we could be reaching that level. I think it's worth noting that service sector inflation and wage growth are a little bit sticky at the moment, and they're not really consistent with that 2% target level. Unemployment in the UK is sitting around that 5.1% level. Expectations are that unemployment could actually push considerably higher, even up to around 5.5%, in which case that would help reduce wage pressures, pulling wage growth lower, and then helping service sector inflation ease as well. Now, as far as the tone of the Bank of England is concerned, despite saying that they expected the inflation rate to cool back towards that 2% target in spring this year, they did also suggest that the pace of rate cuts would slow this year. And they weren't exactly fast last year. But I mean, that does lead us to believe that sort of a 25 basis point rate cut in April is looking likely. But if we do see the labour market continue to weaken, then we could actually see 2 rate cuts from the Bank of England this year. That's what the market is pricing in. Potentially, we could be looking at 3 if the position of the labour market deteriorates and inflation falls faster than expected. Now, as we're heading into this meeting, pound is trading at around 136.50. It's fallen away from that 138 high that we saw, multi-year high that we saw last year. Now, a lot of this is to do with movements in the US dollar. However, if we do see that sort of more cautious tone from the Bank of England continue, then that could give the pound a little bit more support to look back towards that 137 level. However, if we do find that the Bank of England has adopted that slightly more dovish stance as we look potentially towards preparing the markets for a rate cut in the coming months, in which case we could see further pressure on the pound as it looks back towards the 135 levels.